asset portion of the balance sheet. So this afternoon, we will take up liabilities, and then from here, we will cover our midterm will cover uh, after inventory, no? So we have cash, accounts receivable, and then plant assets. So that will be our coverage for, and then these liabilities for the midterm. And then after which we will proceed with the discussion of the financial statement analysis. That would be the coverage sa atong pre-final. And then after which we will go back to the remaining topics then while you are preparing your terminal output. So we will meaning we will discuss first the financial statement analysis specifically for that, so that you will have more time to digest and process and understand the all the how to prepare your terminal output. So again, our midterm will be next week. That will cover cash, accounts receivable, and then cash, accounts receivable, but assets and liabilities. Okay. So this will be our topic this afternoon. We will talk about current liabilities and then long-term liabilities. And then in the long-term liabilities, we have bonds, and then long-term notes payable, and then how are we going to report liabilities and the different ratios in analyzing ratios that we will use in analyzing uh, the liability account. So when we say a current liability, it is a company, it is a debt that will be paid within 1 year or the operating cycle whichever is longer. So kung ang utang, bayaran, if paid not within 1 year, that will be considered as current liability. So typical example of current liabilities includes notes payable. So among all this, ang notes payable nato no pinaka number one gid na siya, that's the most current. And then you have the notes payable, you have your accounts payable, unearned revenues, accrued liabilities, such as taxes payable, salaries and wages payable, and interest payable. So when we say notes payable and accounts payable. So this is the reverse of accounts receivable and notes receivable. So when we discussed earlier, kung kita ang nagbaligya, and then if it is sold on accounts, so that will be recorded as accounts receivable. On the flip side, sa katong nangutang, that will be recorded as accounts payable. In the normally, no, accounts receivable, normally, na siya term, no? So, atong na-learn to 10 and 30. So that, beyond, in the case of 10 and 30, so the buyer is given 30 days to pay. That's the term. So that beyond, kung dili siya makabayad, what will happen is most likely si buyer will execute a promissory note, no? A promissory note. So that becomes notes payable on the part sa katong buyer. On our part, that becomes our notes receivable. So notes receivable, notes payable, accounts payable, and then unearned revenue. So these are advances. These are cash that we receive, of which we, I mean, these are advances on sales that on goods and services that we still have to deliver. So that is unearned, no? Muna siyang advances coming from customers. And then accrued liabilities. So if you look at accrued liabilities, ang iyang example, you have taxes payable, then salaries payable, and interest payable. So these are typically payables na nga you already enjoy the benefit of which niya wala pa nato nabayaran mo na siyang i-accrue. So we have to record first the we have to record the liabilities because later on payment will follow. Kung ano siya, no, under normal circumstance, you will not know how much taxes you are going to pay, so that at the end of the period, like during December, normally we close the book December, and then we pay our taxes. Philippine setting, we pay our taxes after not later than April 15, kay mo man na siya to deadline, last day of payment, filing our income tax, so that by December na naman nato na recognize na kabalo naman ta pila atong payable, but subject to changes pa na siya, i-audit pa na siya. So that's why we record already accrued taxes payable. Salaries and wages, so normally mo close ang payroll 30, but the 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 giving of salaries will come later. It could come later, 1 week after or 2 weeks after, so that at the close of the month, we will really record salaries and wages payable. And then interest payable, maagyapon, because it comes first, the due will comes first, and then the payment will come later. So that's why we need to record the liability. So that's why mag-accrue ta og liability. So these are the normal, the usual current liability accounts. Okay. So notes payable, these are written promissory note, frequently issued to meet short-term financing, requires the borrower to pay interest issued for a varying period. So in here, kung miingon na ganit sa notes receivable, we expect to receive interest income. So on the flip side, kung mag-execute ta o promissory note, what goes with it is the promise to pay an interest. So that's why if there is a notes payable, we have to compute interest expense payable. So in here, let's go through the example and go through the different life cycle of a notes payable. Example here, the First National Bank agrees to lend 100,000 on September 1. So muhulam ta kang First National Bank of 100,000 dated September 1. And then 12% ang iyang interest rate, yung 4-month note, for a 4-month note. So 4 months ang iyang maturity, and then January 1 ang iyang due payment ko niya, no, due date niya. So that there will be 3 entries atong himuon here at the time of the signing of at the inception of the notes payable. So meaning may inception, that's the signing of the notes payable. In the letter B is considering bayaran nato ang maturity will be on January 1. So that ang bayad nato ana niya will be on January 1. But we have to take note by December 31, we have to close our book, so that on that date, December 31, we have to recognize our interest payable. So that's just the second entry that we have to do. Recognition of an adjusting entry to recognize the interest payable. And then on the third entry will be on the date of payment on sa may atong entry ana niya. So with that, ABC that closed the transaction of the notes payable. So let's go through the different entries. So on September 1, we receive 100,000 kay kita may nangutang, so we debit 100,000 with credit 100,000 na notes payable. So that's on September 1st. On December 31st, we need to recognize the interest payable and at the same time interest expense. Kay we have to pay man equivalent to 4 months niya 12%, so that the 4,000 is 100,000 times 12%, that's 12,000. For 4 months, so that is 4,000. So we record interest expense na 4,000 and then credit interest payable na 4,000. So with that, payable and then interest payable. So that by the time we pay, we credit cash 104,000. We credit cash 104,000. That is payment of the principal amount ng 100,000 and then the interest payable nga 4,000. So that closed the transaction of the 100,000 nga notes payable executed dated September 1 and then paid on January 1. So nakompleto nato ang transactions. Question at this point, people? So, kung ano, tulura ang atong pag-records payable, then pag-recognize nato og interest expense and interest payable, and then ang iyahang transaction, what's the entry during payment. Ang ato na yung hinumduman kining paghimo nato og entry sa interest expense, all we have to do is kung ano nato no, i-record nato ang date of issuance, unya kano sa siya bayaran, unya ang problem mo ana raman na siya, kailangan siya mag-close ang libro on December 31st. So what are the entry that we have to make? So yun ana ra bantayan ra gyud nato ana ang situation. Now, sales taxes payable, kung diri ni sa ato this is equivalent to output VAT nato, kay di ba mo palita kitay mo palit every time we pay 12% of that is payment for VAT, and then meaning ang atong gibayaran is 112%, no? So the 12%, the 100%, that's the value of the item to the seller, and then the 12% of that is equivalent to the VAT that we pay of the item. So that on the part sa seller, so ang atong tan-awon diri karon part sa seller kay nganong nagkuan man siya og sales taxes payable. So mani ang ato ni siyang tan-awon sa part sa seller. So that sa 12% nga in this case sa 10,000 nga sa 12,000 11,000 sorry, sa 11,200 nga atong gibayaran, 10% of that is will be recognized as sales revenue sa sa seller. So 11,000 actually, kung ang the way to compute that one is assuming na akay 12,000 nga gibayaran, all you have to do is imo ra gyud na siyang i-divide by 1.12. So anybody can compute what if 15,000 ang gibayaran, pila man ang sales revenue nga iyang i-recognize? Anybody from the group? Should I call name? Richlyn, Secretariat. Richlyn. Hello, Richlyn. Hello. Anybody from the group? I want somebody to, have with you your calculator so that we can compute together. Anybody from the group? Naapay tao diri karon? Pasig na tao, no?
Miss.
Ortiz, sige na kay calculator Ortiz or any corner maski unsa lang nga maka-compute nato. Assuming na kay paliton nga 15,000. Okay. And then all you have to do is divide 15,000 by 1.12. Pila iyang result?
13,392.86, Miss.
Okay, so that's the value, that's the sales amount nga atong ikuan, that's the sales amount nga atong i-recognize as sales revenue. I-multiply that by 12%, 0.12.
0.12.
Multiply that by 0.12.
1,607.14, Miss.
I-add na siya sa katong sales value nato. Pilay abton. Katong
Plus 13.
that should add up to 15,000.
So, Miss,
Okay. 15,000 divided by 1.12.
1,000 ay 1 2 eh 1 2
Pila iyang result? 13? Mato no?
Yes, Miss.
Okay, sige. So that should be the sales revenue nga i-recognize sa seller. And then multiply that by 0.12. That amount.
1,067.14.
Okay, you add up that to the first katong atong gikuan. Katong 13,000 something, i-add up na siya.
Yes, Miss. 15,000, Miss.
Oh, that should add up to 15,000. So if mo go back ka dire sa atong example. So, more na siya, no? In that case, when we buy something worth 15,000, 13,000 of that, mo na atong recognize na sales revenue. Mo na atong recognize. Then, the katong 1,600, that's the amount na atong that's the amount na gibayaran sa atong kanang client na as VAT. And then that VAT, katong 1,006 or in this example nga 1,2, that will be recognized as output VAT payable. So that by next month, we are bound to remit that to BIR. So mo na siyang gi-consider siyang sales taxes payable or output VAT payable. Mo na bayaran nato. Mo na siyang gi-consider siya nga payable. But what will happen is that while we recognize here 1,2, in that case atong gi-compute earlier katong 1,006 is our output VAT payable. What we will remit to BIR will be net of the input VAT. Kaya di ba when we produce something, we buy raw materials and so on. No, we buy services, and then when we buy raw materials and when we buy services, it comes with it also with the VAT portion. So that katong atong gibayaran, kita karon ang ibayad, no, katong atong gibayaran, a portion of that is also VAT. So that when we remit the 1,2 here or katong 1,6 sa katong imong na-compute, that will be reduced by the amount sa katong atong natigo mga input VAT. Input VAT. Input ko, no, gitawag nato na input VAT. So meaning gitawag nato siya input because these are VAT that we pay for the services and goods that we purchase. And then by the time we sell our item, our product, or our services, ang term na po nato ana niya is output VAT ko lang ni siya, no? Output VAT payable. So that output VAT minus input VAT, that will be the net cash that we will be remitting to PIR. So, follow ra? But don't worry, I will not be asking such kind of question. But ako lang nang gikuan sa inyo ha, because later on, that will have an impact later on sa inyong feasibility study if you care to consider the VAT payables. You might be asked, no, you might be asked sa kanang implications sa output VAT or input VAT. But normally, we consider only for to simplify things, we only recognize as sales revenue para mawala na ng mga consideration niya sa output of input VAT. But you need to understand this. Output VAT is something that we add on, atong 12% na atong i-add on sa atong 13,000. And then the input VAT, that's the VAT that we pay in all the goods and services that we acquire. And then we remit only the difference. So all in all, what we are paying is the 1.3 katong imo na compute for the 1.2. Kay in the first place katong atong difference sa input VAT ang ni-remit ato ang katumang say kung ningkaon ta sa Jollibee, a part of that is input VAT. So ang ni-remit ato ang ang Jollibee. And then ato tong gamiton kay there's a certificate of that will be nato no i-support naman na siya. Then what we remit to the BIR is the difference between the input and the output. So suma total ang atong gibayaran is 1.2 for this matter or the 1.3 katong sa example. Follow people? Okay. Now, likewise, taxes payable. There are three components there are three components when we compute for the payroll. You have here the gross earnings. So this is our whatever we earn. And then from our earnings, there will be mandatory payroll deductions. There will always be. And then gross earnings minus payroll, that will be the amount that we receive when we as our as net pay. So you have the gross earnings, then the payroll deductions, and then the net pay. So that in this illustration here, this is US man, but definitely same ra gyud gihapon nga concept. So you have your gross pay minus your payroll deduction, you will receive the net pay. And then the payroll deduction will have details. So in our case, we may have mandatory deductions for SSS contribution, for pag-ibig, for PhilHealth. What else? Tax, kanang income tax na to. In case you are receiving more than the minimum wage, kay kung minimum wage earner ka, exempt man na siya sa taxes. But if you are receiving more than whatever amount in excess of the minimum wage, you have to pay for a tax for that. So that in here, the consideration here will be, in this case, this is this is our gross payroll, Katricia, salaries and wages. So this is the amount that we will charge to our profit and loss or income statement. Kay mao man gyud ni ang atong mao ni ang na-render nga service sa atong mga empleyado. So that's why this is the full amount. But the question is how much we are going to pay sa ating mga empleyado. So that will be deducted by the mandatory deduction. So you have here, you charge here salaries and wages, and then you credit here payable. Kaya i-deduct man natin siya sa ihang payroll. So could be here pag-ibig, it could be here PhilHealth, it could be here SSS contribution. So that assuming these are the deductions, and then the remaining amount will be considered as salaries and wages payable. So only siya karon mo reflect to as salaries and wages payable. And then another part also will be reflected as Pag-ibig payable, SSS payable, and then PhilHealth payable. And then all this payable, kaning tulo, will be remitted next month. Okay, kung ano man na siya, pagka next month naman ang iyang payment. And then, this is also the amount that will be recorded as wages payable. So that by the time Manuel do, mo na ni ang iyang kung ano, salary, i-debit niya ang salaries and wages payable and credit cash. But this, definitely, this 100,000 will be paid in cash ultimately, but of different pay. This one will be paid to the employees and this one will be paid to atong Pag-ibig, PhilHealth, or SSS. So, basta ang pinaka-gross na tuanin niya is 100,000. So, ultimately, this will all be paid in cash, but at first, lahi-lahi lang tag-recognize na payable. So, that's kung ano, payroll taxes payable. Okay. So, current liabilities, unearned revenue. These are revenues received before the company delivers the goods or if in case ang atong gibaligya product or provide services. Normally, in this kind of industry like airline, magazine publisher, then hotel, normally ang ilang dagan gid sa ilang ano, kaya di ba sa airline, you buy first ticket, then comes later, musakay ka sa plane. So that by the time you pay for your ticket, it will always be booked as unearned ticket revenue. Or kung mag-subscribe kag magazine, it will always be booked by the time maka-receive siya cash unearned subscription revenue. Kaya normally, kung ano man siya, 6 months maybe, 3 months, 6 months, or 1 year ang subscription. Or when you book sa hotel, you will be required to have a deposit so that itong advance na to will be recorded as an earned revenue, rent revenue. And then by the time you check out, so na-provide na ang service, so that's the time na mag-record sila o service. I mean, revenue. So, like in here, na-share ko nagbaligya siya og 1 season, 5 games, so that nabaligya niya at the start of the season. Fully sold out na ang ticket. So, debit siya cash, credit siya unearned ticket revenue. So, this is good for the 5 season. Yeah, by the time na nahuman ang first game, so mag-record na siya o revenue equivalent to the first game and so on. So, that's unearned revenue. Basta ang unearned revenue, these are advances for sale of goods and services. Okay, so we're done with unearned revenue. How about current maturities of long-term debt? Now, this will happen if, like for example, you apply for a loan, 5 years to pay, and then if it is 5 years to pay, the 1 year ahead of that, like for example, ang atong term is bayaran siya ang atong long term, it will be January January. Akin gamito na lang nato ni nga example. So when the construction issues a 5-year interest bearing 25,000 note in January 2017. So January 1 mo siya ang date of the note. This note specifies that each January 1, starting pagka next year, when they should pay 5,000 of the note. When the company prepares financial statements on December 31, 2017, so what amount should be reported as a current liability? What amount should be reported as long-term liability? So the 5,000 here, the 5,000 will be reported as current portion of long-term debt or current maturities of long terms. Ang point na nato din hingan nung 25 man no, so pagka 2017, di ba, kung atong balikan ang atong definition, current liabilities are payable within 1 year. so that this will inform us, this will inform the reader, the stakeholders, that there is 5,000 worth of long-term payable by next year. Out of the 25,000, 5,000 of that will be payable next year. So, muna siyang ibutang siya current liability. 5, and then the 20 will remain as long-term debt. Now, so there is, let's go to, we're done with current liabilities. You have your notes payable, accounts payable, accrued, accrued payable. So these are your taxes, these are your wages payable or interest payable. And then you have your current portion of long-term debt. So these are typical example of current liabilities, and these are payable within 1 year. So what are long-term liabilities? So here's another type of liabilities which are long-term. So long-term are obligations that are expected to be paid after 1 year. And the typical example of this are bonds. Uh, Bonds are a form of interest-bearing notes payable, normally sold in small denominations. In our case, sa US, 1,000, but in our case, normally it is 50,000 pesos. Ano siya iyang normal denomination, multiples of 50,000. A corporation issuing bond is borrowing money. Person who buys the bondholder is investing in bonds. So may istorya ani niya, ani ni no, like for example si San Miguel Corporation right now nagkuan siya no, naana siya gi kuan nga project, maghimo sila o Cavite man siguro, maghimo sila og airport. So just like kuan na siya PPP, partner kana sa pa na siya ma'am, sa pa ni siya partnership na private partnership nga kuan project, private PPP nga just like kining CCLX. So this is a PPP of which ang group ni Pagilinan mo oy nagkuan na no, mo ay contractor, mo ay developer ana niya. So that's a PPP. So si San Miguel Corporation, just like also Pangilinan, needs money to finance the construction of the airport. So that si Pangilinan, naa siya yung mga probable kung ano yung sources of funds. But definitely, these are all long-term. Kaya di man pwede nga bayaran na niya within 1 year. Kaya ako magkain na siya na project and it will take some time to complete the project. So, wala siya din ha, economic wise, kung ang imong need sa money is short term, just like palit ka og bayad sweldo, pamalit og raw materials, so your sources of funds should also be short term. But if your projects are long term, your sources of funds should also be long term. Okay, so let's go to San Miguel Corporation, maghimo siya airport. So magkuha siya no, mag-raise siya og fund to finance this construction. There are possible sources of funds niya. One is mo issue siya og bond. In this case, si San Miguel Corporation, siya man ang nag-issue og bond. Kuan siya no, borrower si kuan ani, ma-borrower si San Miguel Corporation. He is the borrower. Ya kita nga, if we are the person who buys bond, then we are investing in bonds. Kita ang investor. And then in that case, kita ang investor, we earn interest out of that. And on the reverse side, si San Miguel Corporation, kay siya man ang nag-issue sa bond, mubayad po siya og interest. Kung anong mubayad siya interest expense, mo recognize siya interest expense, mubayad siya interest sa nakapalit sa iyang bond. So, mo na siya ang so one source is bond. Another source is pwede po siya mo issue og stock niya si additional stocks ang San Miguel Corporation. So, what will happen is that katong nakapalit sa stocks will not be receiving interest, but rather mo receive siya og dividend. And then si kuan karon si katong nakapalit atong stocks are stockholders. I-consider siya nga stockholders. And then si katong nakapalit sa bonds are creditors of San Miguel Corporation. So inana ang iyang inana ang iyang kalainan. So pwede siya again, pwede siya mo issue og bond, pwede siya mo issue og stock, or at the same time pwede siya mo issue bond and stock at the same time. So mao na ang iyang sources of fund. So let's go to the details of bonds. Now, there are different kinds of bonds. You have the secured bonds, unsecured bonds, convertible, and callable bonds. So when we say secured, so there are collateral, na-collateral ana niya, no, nga bond. Okay. So whereas unsecured, of course, wala siya collateral. Now, what are convertible bonds? So these are bonds nga with a promise nga at some later time that will be converted to katong bond will be converted to stock. So what will happen is kung ma-convert na siya to katong bond to stock is that we will stop, kita ang nakapalit sa bond, we will stop receiving interest income, but instead we will receive na dividends. So yung ana no kay kuan naman ta stockholder naman, from bondholder we will become stockholder. So being a bondholder we will receive interest income, but being a stockholder we will receive dividends. So yun ana ra na siya. And then there are also considered callable bonds. What are callable bonds? Normally ang bonds na siya life maturity na siya 10 years, it could be 20 years, it could be 30 years. Now, sa ng maturity, so these are, ang nature sa bond is, palito na to siya today, no? And then maturity date niya, assuming is 10 years from now, by that time, bayaran ta, ma-receive nato balik ang principal kung pila pagpalit nato sa bond face value. So na siya, no? Ma-receive na to ang principal during the time of maturity. However, there is a callable bonds. There are provisions nga moingon siya nga kini nga bond is callable. So meaning gitagaan og prerogative ang bond issuer, in the case is San Miguel Corporation, i-recall niya ang iyang i-redeem early sa maturity ang katong iyang bond na iyang gibaligya. So what will happen is iyang i-redeem early so that di na siya mo balik. I mean, mo stop na siya bayad og interest payable. Kita nga bondholder sa dili na ta maka-receive kay we were being paid already with the principal in between prior to the maturity date. Ano siya ang callable bonds. So secured, unsecured, convertible, and callable bonds. Now, let us some terms about bonds. Now, state law, in our case, Securities and Exchange Commission grants the power to the corporation to issue bonds. So ang SEC ang mo approve, no, on our case. Board of Directors and stakeholders must approve bond issues. The Board of Directors must stipulate number of bonds to be authorized. So total face value, contractual interest rate. So naa siya nga mga ato na siya unsa na siyang contractual interest rate, unsa nang face value. And then bond terms set forth legal document known as bond indenture. So there are a lot of provisions that must be written. Daghan na siyang mga provisions, no? Kana siya tanan nga mga provisions will be written on a legal document called as bond indenture. So that siya document ang bond indenture. And then as bondholder, we receive a bond certificate. So mo ni atong hawiran. So example to that, no, before that guy, no. So there is by maturity, It's a sum of money designated maturity date plus periodic interest at a contractual stated rate on the maturity face value. So we receive interest and maturity value. Interest payments usually made semi-annually, then issued to obtain large amount of long-term capital. So muna akong giingon, no? Issued to obtain large amount of long-term capital. So this, when we expand our business, when we buy equipment, when we construct new kuan maybe expansion, you need capital, big capital amount. And these are also long term kuan fixed assets. So that's why we the term of payment also should also be somehow kung unsay life sa atong kung sa life sa atong sa atong expansion, somehow that should also be at least man lang kuan siya mo commensurate even parehas sila o term or lower, but not so that your payment term should not be more than the term or the life of your investment. So kada lang yun. So as much as possible, kuan siya 1:1, or your long-term capital maturity should not exceed more than the life of the asset na imong gi-invest. Okay, so investment company sells the bond for the issuing company. Unsa man siyang investment company? Sells the bond for the issuing company. So ang issuing company karon is San Miguel Corporation, yang investment company kung kinsa to nga mga, in our case, these are normally banks ang mo kuana na nyo mo issue, like for example RCBC, unsa ni siya Metrobank. So these are investment company nga mobaligya. So we will not be buying directly from San Miguel Corporation, but San Miguel Corporation will be talking with investment company, like most likely banks. Sila na mobaligya, and then we will buy bonds from these different banks. So muna siya investment company, and there are also issuing company. Okay. So these are example of this is a bond certificate. So you have here, this is the issuer of the bond. In this case, it could be San Miguel Corporation. So muna siya din hano. Then you have here 5.75% sinking fund debenture due May 1, 2021. So June 2021, that's the maturity date, and then this is the 5.75, that's the contractual interest rate. And then this is the face or the par value of the bond. So meaning for every certificate, it is valued at $5,000. Okay, and then all you have here are the fine prints. May ka na literal fine prints, no, you have really to enlarge para makita nato what are the provisions. But in most these are only important important provisions, but the details of all the provisions you will find it in the bond indenture. So this is a typical example of a bond. Okay. Now, just like stocks, it can also be traded it can also be traded. So meaning pwede ta ani mo palit, pwede ta mag-trade, no? Palita o bond, and then pwede nato ni siya i-trade. Bond prices are quoted as a percentage of the face value. A quoted price of 97 means 97% of face value. So example here, so this is ang issuer ani ang Boeing, then maturity is amo ni ang iyang 5.125, mo ni ang iyang contractual price. And then maturity is February 15, 2017, and then close is at 96.597. Ang yield niya is 5.747. So this is a mathematical computation between the current yield is so this is the current yield of the bond. And then estimated volume traded during the day is 33,965. So Boeing Company has outstanding 5.125%, 1,000 bonds that mature in 2017. They currently yield at 5.747 return. And then on this day, 33,965,000 in thousand volume of these bonds were traded. At the close of the trading, the price was 96.595% of face value or 965.95. So remember, ang face value is 1,000. But it was sold at 96. Traded siya, close niya nga value is 96.595. So meaning, kung kinsa tong nakapalitan ang adlaw, they pay for 96 965.95 ana nga for a 1,000 band ang gibayad lang niya is 965.95 mo na ang botipas na po. Okay. Now, when we although dili nakatamo deal ani niya no, but for information, the current market price or the present value is a function of the three factors: dollar amount to be received, length of time until the amounts are received, and then market rate of interest. The market rate of interest the rate investors demand for loaning funds. So kaning market interest rates, the float put ni siya no, it's not fixed. So mo na siya magdepende na siya sa saleability sa bond. And then the length of time until the the amounts are received. Like for example, ang maturity is 10 years. Ka-issue pa lang. So you have 10 years to wait. And then you have to factor in that amount to to compute what's the present value of that equivalent bond. So there's a lot of computation there. Dili na lang nato na siya i-discuss, but what we would like to know is, what we would like to emphasize here is that the current market price or the present value will somehow has three factors. Kay murag naa man gud na siya factor ang imong length of time, and then ang kanang appetite of risk sa kanang appetite of risk sa investor, and then the market rate of interest, prevailing market rate of interest. So naa na siya daghan na siyang mga daghan kay na siyang mga factors nga to consider in computing the present value of the bond. Okay, just remember, when you invest 6.5, paliton man nato ng 965 today, and then you receive that amount later, 10 years after, you receive 1,000. Diba? 1,000 ang mo. Plus, you receive 1,000 10 years after, and then you receive kanang on quarterly maybe, on annual basis, on annual basis, you will receive 5.125 as interest income. So, what is the present value of that today? Yeah. What is the present value of that today? Yeah. But you need a percentage amount, no? You need your at what percentage nimo na siya i-compute to bring that amount to present value. So that is where you have to consider the market rate, interest rate, and then plus also your appetite, what's your desired rate of return. So complicated na siya nung to compute the present value. But for that, we will not compute the present value of that today. Okay. Now, corporation records bond transaction when it issues, when it redeem, and when bondholders convert bond into common stock. So naa siya these are the three different time periods. Kung sa kuno'y pag-record nato, when you issue the bond, by that time, i-redeem na siya or i-buy back. And then, or what are the transactions when bondholders convert bonds into a common stock. Katong convertible nga stock. Now, bonds are issued at face value. So, tulo siya, no? Kanang pricing will be issued at face value, at a discount, or at a premium. Now, okay. Now, let's go assuming ko the bond contractual interest rate is at 10%. Kung atong gamiton ganina katong example katong 5.125 no. So in here ang iyang contractual interest rate is 10%. Now, when issued, remember ang iyang contractual interest rate is 10%. And then when during that time, ang market interest rate is 8%. So meaning ang going na interest rate, no? Prevailing na interest rate is 8%. And then you were able to issue your bond at 10%. So ang buti pasabot ana niya bond sell at a premium. Kaya nga naman ang prevailing interest market interest rate is only 8, but you offer your product at 10%. So imo siyang gi-offer at a premium. So daghan mo palit no sa imong bond kay murag og kung ako'y investor karon, I have the money, i-prefer nako ang imong gi-issue nga bond kay you offer at 10% ni interest while the market interest rate is only 8. So I will prefer to buy your bond. So that is bonds sell at a premium. And then, of course, kung parehas lang, so gibaligyan nato siya at face value. And then, pero kung ang market interest rate niya is, ang prevailing is 12, yet you are only selling your bond, you only promise to pay interest at 10%. So you sold your bond at a discount. So ingon ang iyang interpretation. Dili na ko magkuan lang aning kuan ha. Aning uban nga mga transactions. Ang ako lang is for you to be aware ana nga transaction. Okay. So issuing bonds at face value. Transaction niya, you debit cash. Kay mo man imong na-receive no, then bonds payable 100,000. Okay, so that is at face value. Issuing bonds at a discount, you receive cash 98,000, and then bonds payable 100,000, and discount on bonds payable is only 2,000. Ibaligya man nimo at a discount. Issuing bonds at a premium, you receive cash 102,000, and then you credit bonds payable 100,000, and then you credit premiums on bonds payable 2,000. Redeeming bonds at maturity, you debit bonds payable, you credit cash. But of course, in between, you have to record your interest expense and interest payable. Yan na siya. You debit interest expense, you credit interest payable. Kaya normal man na siya nga mag-recognize kag interest expense and interest payable. So, yearly mo na siyang himuon or quarterly or semi-annual. To redeem, so meaning, by the time of maturity, you debit bonds payable and then you credit cash. Regardless of the amount you paid, like, di ba, si Kuan katong ganina, si Boeing, gipalit man to lang sa kung ano, 965, mo to'y gibayaran niya. But, kung ano na siya, mo na imong kung ano, kung ikaw mo invest sa bond, you have the option imo na siyang ibaligya. You can sell it at a discount or at a higher price. So you may sell the bond at kung 1,000, you may sell the bond at 1,100, 1,002, 1,100. So depende na no during that time. Or you could sell at a discount katong 96.5 lang, 965,000. But if you hold the bond until its maturity, you will receive the full amount of 1,000. In this case, the full amount will be paid based on the face value. So regardless of how much the holder pays for the face amount. Mo gito iyang kuan. Okay, converting bonds into common stock, i-debit niya ang bonds payable and then credit niya ang common stock. And then whatever issues here, whatever kung ano ka ng mga agreement, so there will be other. In this case here, ang value of the stock is 2,000. In exchange of the 100,000, gikuanan siya o tagaan siya 200,000 nga kuan. 200,000 nga common stock valued at 10. So that equivalent to common stock is 20. But in excess, there's paid in capital in excess of par of 80. So ma-discuss na nato ni siyang kini nga term, no? Paid in capital in excess of par when we take up corporation. So dili na lang sa nako na siya i-discuss on details kay ma-take up na nato siya. Accounting for long-term notes payable may be secured by a mortgage that pledges title to a specific asset as security for a loan. Then typically the term requires, this is another kind of long-term, katong ganina bonds, kani long-term notes payable. Typically the term requires the borrower to make installment payment over the term of the loan. Its payment consists of interest and a reduction of loan principal. Companies initially record mortgage notes payable at face value. I will discuss ani later lang. So this is how we report liabilities So you have there current liabilities, short-term borrowings or notes payable, accounts payable, accrued expenses, accrued wages, customer advances, mo na siya ang katong unearned, no, dividends payable, other current liabilities, long-term debt due within 1 year. And then you have your total liabilities, yung current liabilities, then stockholders' equity. So that's your total. And then with that, we can now prepare. These are the different ratios that we need to compute. One is liquidity, refers to the ability to pay maturing obligations and meet unexpected needs for cash. So there are two indicators, financial indicators that we will compute. The working capital, we can express this relationship as a dollar amount or the working capital and as a ratio or a current ratio. So to compute working capital, you have your current assets less current liabilities that will give you working capital. So what we are computing here is the dollar value, no? Current assets minus current liabilities, your working capital. Your working capital, this is your excess, di ba? These are your current assets. These are assets that will be convertible to cash within 1 year. And then you deduct your current liabilities. These are your liabilities payable within 1 year. So that the difference, this is your net or available capital, available amount of current assets that will be used in operation. So mo nagitawag siya working capital. So current assets minus current liabilities. But the moment current assets divided by current liabilities, this is the relationship between your current assets versus your current liabilities. So in this case, for every $1 of liability we have 1.4 of current assets available to pay your current liability. So may buti pasabot ani no? For every one current liability, there is 1.4 of current assets available to pay your utang. So that's the meaning of that. Another is long run solvency. Two ratios that provide information about long run solvency and the ability to meet interest payment. So we have here debt to asset ratio and then times interest earned. So these are solvency and ability to meet interest payment. So that the formula will be total liabilities divided by total assets. That will give you 79.7%. No, so meaning out of your total assets of 11,200, 8,925 of that is sourced from utang. So dako kay siya no. Murag kuan kay siya. Ni siya the higher the percentage of debt assets, the greater the risk that the company may be unable to meet its maturing obligation. Kay dako na gud kay na siya no. Almost kung ingon ana murag gipanag-iya na ni siya tanan sa kuan, halos gipanag-iya na ni siya tanan sa mga creditors. Kay 80% man of your assets giutang man na siya. So there's a risk na pwede ka i-take over kay kuan man di makakabayad. So man na siya, the higher the number, the higher the risk, the greater the risk that the company may be unable to meet. So that when we look at ang pangutan nata is 79.7% good or bad. Depende na siya no kung asa na siya sa imuhang basis. But normally yun na siya nga the best gid ko nung kuan the best is 60-40. So 60%, so meaning 40% lang dapat ang atong liabilities to total assets. But depende po na siya sa industry. Kay like banks, they allow higher kani debt to asset ratio. So again, it depends. So depende na later on sa iyang industry. Okay. But I know you can follow na the computation. So you have also here the times interest earned. So the formula is net income. Net income, no? I-add back na to pagbalik ang interest expense plus income tax expense. Yeah, divided by the interest expense that give you, in this case, 6.71 times. So for every 1 peso nga interest expense nga atong gibayaran, there is 6.71 times available net income that will that will be able to to meet the interest payment as they come due. Mo ni puti pasabot niya. Times interest earned indicates the company's ability to meet interest payment as they come due. Okay. Pero kanong ibalik mo nato ng net income, i-add back nato interest expense and income tax expense. It's kuan man nato kay kung kani siyang interest expense, mo naman ni siya no, mo naman ni siya nga amount interest expense o interest expense. So ato siyang i-add back para makita nato ang relationship niya how big is our net income, how big is the net income for us to meet the interest expense payable. So man siya diha, interest expense at times interest earned. Now in here, okay. So there's a question. Di ba earlier nag-discuss ta og possible sources ni San Miguel Corporation, either bond financing or through stocks issuance. So in case here there's no exact or direct answer ano niya, no? Because you have to look into the you have to look into the you have to strike a balance between these two so that it will result to a positive financial outlook of the company. We have to consider here in bond financing, these are the advantages, no? Stockholder control is not affected. Bondholders do not have voting rights. Mama na siya, no, wala siya voting rights. So current owners or the stockholders retain full control of the company. Yeah, bond financing will have a tax saving effect. And the return on common stockholders' equity may be higher. So, mas mato ni siya masabtan here. Okay. So, debt and equity financing. So, Microsystem Inc. is considering two plans for financing the construction of a new 5 million plant. It is considering two alternatives for raising an additional 5 million. So ang kuan ani niya is there is a plan to expand the business. So they need to raise 5 million. So plan A nila is mag-issue sila of additional 200,000 shares of common stock at a current price of 25 per share. So man siya 200 times 25 that will give rise to a 5 million additional funding. Or mag-issue sila bond but they have to pay interest of 8% and then they have to pay an interest of 5% and then the foregoing assumptions they have to pay income tax of 30% and the existing interest before interest and taxes is 1.5. So this is where we are going to take off our evaluation. So in here, you have here, this is precisely how we do it, So you have here plan A, issue stock, plan B, issue bond. So that this is the given ko an income before interest and taxes. So this is the existing financial status of the company. Asya 1.5 billion. And then plan A, adi lang sa plan B. Sa plan B, mo issue siya o bond so that in considering bonds, with the issuance of bond, you have to pay for the interest of 8% per annum. So in here, you have 8% times 5, so you will pay 400 for the first year lang na you will pay 400,000 dollars. So that income before income taxes is 1.1, and then you apply taxes of 30% so that net income is at 770,000. And then uh, in with the issuance of bond, there's no change in outstanding shares. Kaya wala man ta na maligya og shares no, so 100,000 ang atong existing shareholders. So 770 mo man itong net income, then you divide that by number of outstanding shares so that earnings per share is 7.7. The earnings per share very important kaayo ning data for paano kanang mga investors mo na ilang gitan-aw. Okay. So may issue og bond. Then plan A, may issue siya additional stock. Okay? So with that, mag-issue man siya additional stock, wala siya wala man siya bayaran ng interest, wala ra, so 1.5. Then income tax, so it will be from 330, mahimo siyang 450. Okay, wala man na po taas man ang atong income. And then so that our net income is 1.050 million. With that, looking into these two options, when you look at this, of course, looking into the net income, makaingon ta nga better ang plan A. Kay our net income is 1,050,000 compared to plan B, which is 770. But the moment we compute our earnings per share, it will go down to 350 because our outstanding shares now increased to 300. Asa man 300? From 100 plus 200 here, additional shares, so that you have your outstanding shares already of 300. So that earnings per share will now be lower to 350. With this information, stockholders will will have a negative impact to stockholders. Kay instead na 770 ang akong share, nahimo na lang 350. This will give kanang bad signal to investors. So makaingon ta asa may better ana niya. So in the perspective of the investors, plan A is not a good option for the company. So that what is best here is uh, you, you have to strike a balance between issuance of stock and issuance of bond. So depende na na siya how you are going to sell how you are going to sell your plano strategies. But definitely by just choosing A over B is not a good uh, strategy, or choosing B over A is not also a good strategy because you need to strike a balance between A and B. So that's what we are trying to emphasize here. Okay, so I would like to go back to uh, computation of katong this one. So what is important here is that the recording of our in this case for a 500,000 note, 500,000 at 20 years siya nga 20 year 500,000 8% 20-year mortgage note. The terms provide an annual installment of 50,925. Okay. So, ang atong gusto nga makuan diri here is how we are going to murag mo ani for 20 years mo ni atong bayaran annually 50,926, a combination of interest expense and uh, interest and principal. So, ang buti pa sa butaan niya of the 50,926 na gibayad nato on the first year, 40,000 of that is applied to interest expense and the 10,000 of that is applied to the principal. So, it's just like Okay. So, ako na siyang i-present ha. Then I'll show some computation. $500,000. Three, 24, 22, 23, 23. Oh, oh, wrong. Number of payments, 20. Number of years, 20 years. Number of payment, 1. Ano mo siya? 2022. Monthly payment, 20. Monthly payments, 1. Anyway, di nakuan ko niya, no? Something is wrong maybe sa kuan. Assuming lang, this is 4 years to pay, 5 years to pay, and then number of months payment na to siya. Na siguro na anyway na siguro na remove na ko ani nga formula class ha. But ang point lang nato ani niya is this is our for a 12 month nga kuan nga computation. This is our loan, and then this is how this will be our monthly amortization nga payable, no, assuming this is our monthly amortization, of which of the 43,000 nga atong monthly payment, 40,000 of that is paid to principal, and in the remaining 3,000 is equivalent as payment for interest. So that what is our interest here? What we want to know here is what will be our transaction monthly. So while we credit cash, mo ni atong we credit cash. On the first month, we credit cash 43,000, 43,494.21. We debit so that on the first month, that is our cash. We debit credit cash, and then we debit loans payable nga 40,160.88, and then interest payable nga 33.33. So wala siya ang atong computation, no? So that's how we record kuan or so that would be our transaction. Okay? So again, the interest payable will be reported as part of our current liability. Okay, payable naman na siya outright. Okay. So that's it, people. So current liabilities, in our liabilities, you have your current, you have your long-term. So for current, you have your notes payable, accounts payable, the mga accrued or unearned revenues, then accrued payables, and then you have your current portion of long-term. And then for long-term payables, you have a typical example here are bonds, and then long-term payables. And then as part of our evaluation, you have the computation of working capital, and then you have your current ratio, and then you have your debt to asset kung ano kanang ratio, and then you have your times interest earned nga kuan evaluation of your liability. So the higher in times interest earned, the higher the number, the better is the performance of the company. And then debt to asset ratio, the higher the number, the more risky is the financial picture of the company. And then the higher the working capital, the better, the higher the current ratio, the better is the financial picture of the company. So that's it. Any question for the regarding liabilities? So the coverage of our exam will be up to tanawon lang na ako ni siya, but most likely I will include liabilities. Then I still have to post an activity pa for you to do. Then midterm will be next week as scheduled. That will be next week. Okay, questions? Hello?
Wala rin, miss.
Okay, so that would be all for this afternoon. Okay, so see you next Wednesday. Okay, bye.
Bye, miss. Thank you, miss.
Okay, bye, miss.
Bye, miss. Thank you.
Bye, miss.